Hello C aspirants, welcome back to our channel C Aspirants Comfort Zone. Today we'll be revising chapter 8 of audit, that is Audit Report. Essay 700 says that forming an opinion and reporting on financial statement. The objective of this essay is to form an opinion on financial statements based on evaluation of conclusion drawn from audit evidence obtained, to express opinion through report. Purpose is to consistency and comparability more relevant to audit. Basic elements of audit report are title, addressee, auditor's opinion, basis of or opinion, going concern, key audit matters, responsibilities for the financial statements, auditor responsibility for audit financial statements, layout of description of auditors, responsibility for audit of financial statements, other reporting responsibilities, signature of the auditor, place of signature, date of auditor's report. Specific evaluations while forming opinion on report are use of significant accounting policies in financial statements and being consistent, accounting estimates are reasonable, information in financial statements are relevant and reliable, financial statements has adequate disclosure to users, a terminology with title and other are appropriate. We have to report to all the members who has greater than 5% of shares personally. Unqualified or clean report, that is for good forms, will be giving it. Essay number 705 modifications to the opinion in independent auditor's report. Will be giving qualified or adverse or disclaimer. This is we have seen about unmodified, that is clean report. Here the modified one are qualified. Material misstatements are present but not pervasive, that will not affect the other things like that. Unable to obtain evidence but concludes material misstatement but not pervasive. Materially misstated, yes. Pervasive, no. If company doesn't correct the mistake, we have to give it. Adverse opinion, material, yes. Pervasive, yes. Obtained but material and pervasive. If both are yes, we'll be giving adverse report. Not yet audited, not obtained, but before knowing, only before seeing the organization only will come to know that there is some problems. Before looking into the financial statements, we'll come to know about it. In that case, we'll be issuing disclaimer opinion. When issued, cannot issue unmodified for associate of it. If we have issued these kinds of adverse or disclaimer for its subsidiary or associate also, we cannot issue the clean report. We can issue any of these three but not the clean report, because it has problem means the subsidiary will also be having at least a little problem. Thinking like a layman, that will be very much possible. That is why. Key audit matters. An auditor report is the context of auditor having formed an opinion on financial statements as whole. Matters where auditor reviews and comments is required. If company has disclosed the impact pending litigation on its financial statements, made provision as per accounting standard for uncertain losses, if there has been any delay in transfer of amounts to investor education and protection fund by company. Coming to essay 706, emphasis of matter paragraph and other matter paragraph in independent auditor's report. The basis of opinion are done in accordance with standards on auditing, done with responsibility, auditor is independent, statement of trust in evidence and obtained on sufficient and appropriate auditor's opinion. Emphasis of matter is a paragraph in independent auditor that reports to matters presented on or disclosed, and auditor's judgment is necessary for users to understand the financial statements. Not required to modify the opinion, matters not been determined to be a key audit matter to be communicated in auditor's report. The compulsory elements to be included are when FRF prescribed by law or regulation to alert users about financial statements, when facts become known to auditor after balance sheet and provides amendment, uncertainty about litigation or regulatory action, significant subsequent event occurs between date of financial statement and auditor's report, early application of accounting standards that has a material effect on financial statements, a major that has had or continues to have a significant effect on the entity's financial position. Coming to essay 701, communicating key matters in independent auditor's report provides additional information to the users. How to determine it? Subheading: in a separate section of report, it shall state that key matters are those in which auditor professional judgment were most significant in financial statements. Selected from matters communicating to TCWG, when addressed as whole, auditor's opinion, no need to provide a separate opinion on these matters. The purpose is to provide additional value, enhance communication value, greater transparency. Key audit matter is not subject to following disclosure. Those are separate opinion on individual matters, expressing modified opinion, reporting 570. What is 570? We do remember, right? That is going concern. When material misstatement of uncertainty exists. Duties of auditor is ABCDEF. The short form is ABCDEF. The duties are advance and loans are properly secured. B is books entry transactions or compro in interest of company. Cost price is more than sale value of shares, debenture, etc. except financial company. Deposits, loans and advances are shown as deposits. Expenditure of personnel is charged to P&L. For cash, share has been allowed if not position in balance sheet. Now let's study about the CARO. This will be at least getting in the exam for at least 6 to 10 marks. Please focus on this topic. This is very important topics. We'll be compulsorily getting this in our exams. MCA plus NEFRA, they have made 21 points. Those are known as CARO 2020 to protect shareholders from scams. CARO is applicable if to private company, if holding or subsidiary is public, shareholder and reserves more than 1 crore, borrowings 1 crore of financial in any of the whole financial year, total revenue turnover is 10 crores. For this, it will be applicable. For normal, other than this private company, it will not be applicable. We'll remember it as PBD 1110. This is reserves and paid up share capital. B is borrowings. D is total turnover. This report shall not apply on consolidated financial statement. CARO fixed assets. In case if these things are not met, these criteria are not met, but it is preparing a consolidated financial statements, then it is compulsory to make it. We should not look at these points. Will not consider it even if it is below this threshold. We have to compulsorily report it like CARO. CARO fixed assets. Proper details including situation, physical verify at reasonable, internal interval and material discriminants difference is greater than 10%, how it is dealt. Title deeds is in the name of the company. In case of immovable property, items in balance sheet is checked as it is also company's name, not opposite. For coming to the clause 2, that is inventory, physically verify material discrepancy, working capital loans, 5 crore returns agreement with details, whether any discrepancy of greater than 10% in books of accounts. The clause 3 and 4 talks about borrowings and loans, that is related party and secured or not. The loans are secured loans or not non-secured loans, not harmful, low interest or unsecured, reasonable steps to recover if it is made for more than 90 days, loans to directors or according to a provision, public deposit, that is clause number 5. Let's revise once again. One is for fixed assets, 2 we remember, right, inventories, and 3 and 4 is for borrowings. See, they have borrowed so much, that is why they have given 3 and 4. We'll remember it like this. 3 and 4 is for borrowings, 5 is for public deposits. Rules as per company law or National Company Law Tribunal or RBI or court. Cost records, that is clause 6, as per central government order. The chance of getting this question is so high. The statutory dues, clause 7, undisputed and disputed. In undisputed, that is paid and unpaid. If in case it is paid, ignore it. If it is unpaid, outstanding for less than 6 months, then we have to ignore it. We'll be paying it in very upcoming time. If it is outstanding for more than 6 months, we have to report it in CARO. If it is disputed, amount and form of case pending should be reported, even if it is below 6 months or after 6 months. Unrecorded income, that is clause 8, as per IT Act, this should be followed. The chance of getting questions from this is clause 7, that is statutory dues, and this repayment of dues, these are high chances of getting these. Okay, now come back to the topic. Clause 9 is repayment of dues if deflated, nature and amount, due date, etc. Company is a declared willful defaulter by financial institution. Loans used for same as raised. Funds got for a short term used for long term. Company taken funds meet obligation of joint ventures or associates. Any a pledge for raising loans. Clause 10 is application of money raised by public issue and preferential allotment by IPO or FPO, used for same purpose by company or on company in case if it has committed fraud. Clause 11 says about fraud. See, 1 when 2 people join, then the fraud will be happening, right? We'll remember it like that. Note of fraud if company has done or done to company. If the company has done to others or others has done to the company, we have to report both amount, nature plus other possible unidentifiable fraud. Clause 12 is Nidhi company. Maintained ratio of 1:20 of liability, 10% to deposit as liability of members, default in payment of interest on deposit or repayment. For related party, the clause is clause number 13. We have to disclose separately as per AS 18. Internal audit system, clause 14. According to size and nature, we have to check according to the size and nature of the business, the organization we are performing the audit. Then we have to check how the internal audit system is working. Check their reports. If not followed, disclose and report in financial statement and audited financial statements with reason. Clause 15 is non-cash transactions with directors or others. Registration with RBI. Clause 16. As per its rules, whether company has conducted any non-banking financial or housing financial activities without a valid certificate of registration, if company is core investment company or following rules, if more than 1 crore business specifies. Cash losses. Clause 17. If incurred, state the amount. Consideration of issues raised by outgoing auditor. Clause 18. By about uncertainty, if auditor has taken the issue or not. Existence of material uncertainty as to a company ability to meet its liability, that is clause 19. SA 570, that is going concern. If in case if it is going concern, we have to report it as it is a going concern. If not, we have to report that also. In case if it is not, we have to write it is not a going concern and the reason for that. Closed at any moment. Clause 20 is transfer to unspent CSR amount unspent up to 3 years on or project transfer within 6 months to expiry of financial year. Reason for not spending, nature, provision, and also we have to disclose about related party transactions. Coming to clause number 21, the last clause, CARO of group, qualification or adverse remarks in CARO reports of group company financial analysis or preferred evaluation. If adverse remark in consolidated, that is an subscription, show in CARO paragraph. Now let's also study about SA 299, that is joint auditors pooling together resources and expertise of more than one firm of auditors to render an expert job in given time, which is difficult to do individually. The advantages of joint audits are share of expertise, multiple mutual consultation, better quality performance, improved services to client, lower workload, lower staff development costs, lower cost to carry out the work, displacement of auditor of company taken over often prevent a subsidiary audit, sense of healthy competition. The disadvantages are fees being shared, psychological problem about standing on audit, general superiority complexes, problem of coordination of work, areas of work of common neglected, uncertainty about liability for work done. Coming to SA 7-10, comparative information, corresponding figure and comparative financial statements. Compare with last year only to compare last year information is not useful. Exceptions are if previous year report included qualified or disclaimer or adverse and modification is unsolved, evidence of material misstatement exists in prior period financial statements on which unmodified opinion was issued. Prior period financial statements are not audited. We have to compare the previous year and this year. In case of these three situations where, for example, if the previous year audit was only not conducted, how will you compare with previous year? In these three cases, it is exception that you will not be able to compare. You no need to be getting compared with the previous year because the previous year will not even be available. Purpose as per FRF, complete information agrees with amount and disclosure presented in prior period. AP reflected in comparative information or consistent with current period. If balance in P&L are compared and reason is found for differences, setting certain ratios and compare with the same ratio. If difference or material, find reasons, identify unusual transactions. New auditor would check about old report and auditor, that financial statements is auditor, type of opinion, date of report. Responsibility of joint auditors are jointly and severally responsible. Each auditor is responsible only to work that he performed, but all auditors are responsible if Audit work not divided among joint auditors and carried by all joint auditors. Decision taken by all joint auditors in audit plan. Joint agreement for one auditor work. Examining that financial statements of entity comply with the requirements of relevant statutes. Presentation and disclosure of financial statements as per FRF. Ensure it has been prepared as SCs. Point to be considered in developing a joint audit plan. Before audit, auditor shall discuss and develop a joint audit plan. He shall consider, identify division of audit areas and common audit areas among joint auditors, ascertain a reporting objective and engagement plan, communicate among all joint auditors the factors about the professional judgment, result of preliminary engagement and get knowledge, ascertain nature, timing and extent of resources for engagement. Non-applicability of CARO. We already saw that is 1, 1 and 10. What is 1? We do remember, right? P, that is share capital. B, that is borrowing. This is turnover, revenue turnover. Okay, except this should be private, not public. Other companies where CARO is not applicable are OPC, small company, Section 8 company, insurance company, private limited company and banking company. Okay, let's come again. OPC, small company, Section 8 company, insurance company, private limited company if these conditions are satisfied, banking company. Finally, we are at the end of this chapter 8, that is audit report. In case of any suggestions or any queries, please comment down in the comment section, or else in case of anything you want to say me, you can just directly text me on Instagram, which the link has been given in the description, or else you can send messages and you can get the notes from Telegram. That link has been tagged in the description. Thank you. Keep watching, keep supporting. Please like, share and also subscribe to our channel CA Aspirants Comfort Zone.